Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD currency pair. Jakub Novak presents. Today, you could plan to buy the euro at the price of 1.1797. with the target of reaching 1825. At the 1825 level, you could plan to exit the market and sell euro back, expecting a move of 30-35 pips from the entry point. Before buying on a breakout, make sure that the MACD indicator is above the zero mark and just beginning to rise from it. You could also plan to buy the euro today if there are two consecutive price tests of 1.1779, when the MACD indicator is in an oversold area. This will limit the pair's downside potential and lead to an upward market reversal. One can expect a rise to the opposite levels of 1.1797 and 1825. You could plan to sell the euro today once the price reaches 1.1779, a red line on the chart. The target will be 1.1757, where you could plan to exit the market and immediately buy back, expecting a 20-25 pip move in the opposite direction. Some pressure on the pair may be noticeable in the first half of the day. Before selling, make sure that the MACD indicator is below the zero mark and just beginning to decline from it. You could also plan to sell the euro today if there are two consecutive price tests of price at 1.1797, when the MACD indicator is in an overbought area. This will limit the pair's upward potential and lead to a market reversal downward. We can expect a decline to the opposite levels of 1.1779 and 1757. And we're starting with pound sterling dollar pair with thin layer. On the hourly chart, the GBPUSD pair on Wednesday, December 24, rebounded from the resistance level of 35.33, 35.39, reversed in favor of the US dollar, and began a decline toward the 100% Fibonacci level at 1.3470. A rebound from this level would allow expectations of a reversal in favor of the British pound, and a return to the 1.3533, 35.39 level. A consolidation below this support zone of 34.37, 34.70 would increase the probability of a continued decline toward the 33.52, 33.62 level. The wave situation had once again turned to bullish after the completion of the sideways movement. The lost completed downward wave did not break the previous low, while the new upper wave managed to break the previous peak. The news background for the pound has been weak in recent weeks, but the news background in the US also leaves much to be desired. For a week, bulls and bears were locked in a tug-of-war and remained in relative balance. But a week before the new year, the bulls launched a new offensive. On the 4-hour chart, the pair has consolidated above the 100% corrective level at 34.35. which allows expectations of continued growth toward the next Fibonacci level at 127, 1.3795. A bearish divergence is forming on the CCI technical indicator, which may trigger a reversal in favor of the US dollar. That's all for today. See you online soon.